Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We are going to take a look at two companies that have advertising as their commonality between them. And you're going to see exactly what that means when we hear from our strategists Kevin Cook and Ben Rains. And Ben, we're going to start with you this time because you're going to talk about Roku.
Correct, Roku. So it is basically a company that sells platforms that allow you to stream your favorite content. It's kind of like an Apple TV or an Amazon Fire Stick. They went public in the fall of 2017, and since then they're up 210%. To put that in perspective, Netflix is up 94% over that period of time, and they're in that same space, and they're actually benefiting off of Netflix growth because you have to be able to watch Netflix somewhere, and that's basically what they're doing. They're allowing you to watch all of your favorite streaming services in one place. And like you mentioned, ads going forward are going to be impossible to find people as more and more people cut the cord. Some stats put it at 3 million people cutting the cord in 2018, and then 1 million already in the first quarter of 2019. So these trends are going in a direction where you want to be with a company like Roku because people need to advertise. That's never going to go away. But when you go to Netflix, go to Amazon Prime, there's no advertising in those services. But Roku is allowing you and marketers to sell ad space because they have free content on their Roku channel that then supports ad space. And then they're also making money off of subscriptions that you buy through Roku. So that's how they're making a majority of their money as well as ads. And then that third-party subscription money is where they made 65% of their sales in the first quarter, which were up 51%, which blew past estimates. That's up from 46% in Q4. And then they're expecting 40% growth in the full year 2019. And then our estimates are putting it at 33% in 2020. So that big top line growth, this is a company that if you want to be a part of this streaming space, which is what Disney's doing now, they're coming out with a streaming service in November, Apple, NBC Universal, this is where the future of TV is going. Roku's that company that's going to get you in the streaming space. And then just for some idea of what they sell in general, so you go on their website, they sell these little devices. They have multiple different versions of them. You plug it into your HDMI port on your TV. Then they also have smart TVs, which is Roku software built into these TV players. They estimated that more than 1 in 3 smart TVs sold in the first quarter were Roku TVs. So this is a company that's really growing, and they only get to see maybe more growth as more and more people cut the cord in this streaming revolution that's been going on for some time now.
Okay. Kevin, your company actually provides the platform for the advertising.
Well, yeah, they've created an advertising marketplace. You know, as we know, Google and Facebook became the powerhouses that they are by selling digital advertising. And together, they're going to do, probably over $125 billion in digital advertising this year, which is over half of that space. But when you advertise on Facebook with their, they've got great tools. You can, target your audience and track everything. You're just on that platform. It's a walled garden, so to speak.
Yeah.
So along comes this company called the Trade Desk. Trade Desk, TTD is the symbol. And some people just call it Trade Desk, but their name from the beginning was the Trade Desk.
Okay.
So they're addressing the fragmentation because, we just heard about Roku here. And it's so funny, you mentioned cord cutting, but yet they call Roku and its ilk connected TV, right? Because it's connected to the internet. But therein lies the fragmentation. So if you don't want access to the 2 billion people on Facebook, where else are you going to advertise? Well, you can advertise in the New York Times. You can advertise on Roku. So there's dozens, hundreds of websites that have good audiences that you can target. So we've got all this fragmentation. So what the Trade Desk decided to do was we want to find a way to let advertisers get out to the rest of the world. Because so 2 billion people on Facebook a day, 1 billion people on YouTube, but the Trade Desk says they can reach 4 billion people a day outside of those silos, outside of those walled gardens, because they're going to every other platform. And the way they do it is just amazing. They're Their model is a real-time auction. So, you know, when you go on Facebook and you create an ad, you know, you're sending it out there, and it's this process. I mean, you can do it in a half an hour, but then it's sort of set. What the Trade Desk does is create this real-time auction where as soon as you go on a website and the page starts loading, it goes out to the Trade Desk or other marketplaces and says, who wants to advertise in this spot right now? And in like a tenth of a second, you know, thousands of marketers can bid for that spot to get that person, that audience, and still very targeted. So, you know, the model is amazing. And if you go to my website or my screen here, you can see this is the Trade Desk homepage. They've just gone into China. So how huge is that, right? If you want to learn more about the company, obviously watch this video, tool around. But let's talk about the growth. First, I'm going to show you the revenue growth. So here we are. Company goes public in 2016, brought in 150 million that year. They're going to do over 600 million this year, and 2020 looks like over 800 million. So at an 8.7 billion market cap, they're trading just over 10 times sales. But believe me, I ignored this company at $60 on valuation, and you know it's tripled since then. So there's a story going on here, a revolution in digital advertising, which you just can't ignore. Let's look at profits. The company is profitable, and here is the path to profits. We can see on the price and consensus chart, you know, we've gone from the company, you know, was out of the gate was making $1 per share, and now is on its way to making over $5 per share. So, you know, rich there too on valuation, trading over 50 times. But you know, it's just a phenomenal growth story. And this what they call the real-time ad auction is programmatic. So anybody in the stock market who knows anything about you know, algorithmic trading, program trading, this is sort of the same thing. And the company compares it themselves like that too, because you can set up a computer program to send your ads out, you know, thousands of times a day to different websites. Wow. So it's just a very powerful model, and I think, you know, it's going to hurt Facebook, it's going to hurt Google, YouTube, but digital advertising has only penetrated a small portion of the total advertising market. So there's room for all these platforms to grow.
Going to hurt Roku too.
No, it's gonna help Roku because it'll be the marketplace where people can say, oh, I want to use Roku because I've got all this data. That's the thing about this. It's really about the data. What do we know about the consumer and what they're looking for, and where can we find them? Can we find them on Roku watching this at a certain time, or whenever, or who is it that watches this show and uses Roku? The Trade Desk will help advertisers find their people.
Yeah, Roku now already has 29 million active accounts, up 8 million year over year. So there's already almost 30 million people there.
All right. Do either of you own either of these?
I do not, but I am looking to buy the Trade Desk very soon.
Okay.
Same as here. I do not own either, but thinking about it as well.
Okay. It's on your to-do list.
Yes.
Thank you both for that. Don't forget, there's always more stock information, and you can find it on our website, Zacks.com. Just get over to the homepage and start looking through it. With Kevin and Ben, I'm Terry Ruffalo.